All right. Good afternoon, everybody. Thank you so much for joining. I hope everybody can see my screen and hear me clearly. This is Mark Peck speaking from Rocket Dollar, provider of self-directed retirement accounts with a focus on alternative assets. Very excited to be joining you this afternoon. Appreciate your time and listening to myself and the CEO of Harvest Returns, Chris Rowley, discuss agricultural investing, and just going to touch on some of the high-level themes around that space and try to dive into some useful details that can help folks educate themselves and make good investment decisions, in particular when it comes to retirement and tax-advantaged accounts. So just going to get it kicked off with a brief introduction for both of us. Again, Mark Peck speaking from Rocket Dollar. I lead our partnership and business development team, working with alternative asset managers and platforms like Harvest Returns. I myself been really curious and excited about this space for a few years. But honestly, it's been difficult for me to understand and access the right ways and types of investments to get involved. And so that's what's so great about involving the Harvest Returns team and sort of relying on their expertise to help you manage the positions. So today we're going to talk through why agriculture. Really going to lean on Chris there for his expertise and observations in the marketplace. Touch on some trends and opportunities that he's seeing, and then sort of discuss and bring it all back to how this can be used or leveraged through a retirement account. And then hopefully we'll have some good questions and answers at the end. Feel free to chat in those questions at any time during the presentation, and we'll make sure to get them all covered at the end. One item of housekeeping here, just for everybody's sake. Just to be clear, Rocket Dollar Incorporated and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied upon for tax, legal, or investing advice. You should consult your own advisors before engaging in any transaction. Thanks for your attention to that. And here are our lovely headshots. And Chris, I'll give you a minute to introduce yourself and what you guys do at Harvest Returns.
Sure. First off, Mark, thanks for having me today. It's great to be talking to your Rocket Dollar IRA holders, because we think that we have an interesting opportunity for them to invest in agriculture. A little bit about my background. I grew up kind of a city boy, didn't really have an appreciation for food, where it came from, agriculture. I grew up eating a lot of TV dinners. And then after college, I joined the Navy. And as I say, I got to see the world. I've traveled 50-something countries. And one thing I've noticed, no matter where I go, however war-torn or poverty-stricken that country is, or even how well off that country is that every single person on earth is reliant on agriculture. It is arguably the most important industry on the planet, because we all need to eat, we all wear clothes, we all live in houses that have some sort of wood component. And it's an industry that a lot of people take for granted, but very few people invest in. And as you said, it's because most people don't understand it. And even if they did, there's not very many mechanisms to understand it. So that's why about 3 years ago, we created Harvest Returns. And my partner, Austin Manis, who's also a military veteran, and our small team, people like Allison Spence, are all very passionate about agriculture and helping farmers raise money and providing investors these opportunities to diversify their portfolios with this very unique asset class.
Yeah, terrific. Thank you for that. And absolutely, a crucial point that certainly does seem to get lost a little bit, and sometimes in the noise, is just how much of a foundational industry this is really for everybody across the globe. So it certainly has far-reaching implications. Thanks for that, Chris. So just get it started here. A little bit of a high level touch on, sort of why agriculture or ag for the acronym, and maybe just touch on some details and some sort of demographic points here that you observed, Chris.
Yeah. So as I said a little bit earlier, agriculture is an investment that not many people understand, and fewer people invest in it. And that's different though on the institutional side. So large institutional investors like pension funds and university endowments have recognized this particular type of asset for decades. If you'll look at the annual statements of, say, a pension fund, you'll see an allocation into natural resources. And there's pretty much three reasons that they provide these allocations in their portfolio. The first is that it's an inflation hedge. So agriculture is land-based. Land, they're not making any more, as they say, and arable land, which is suitable for growing crops, continues to shrink every year as more and more people move into urban areas, and those urban areas encroach on that arable land. So because of that, land is only going to go up in price, just like real estate. It's a lot of the same benefits. And I've been a real estate investor myself for 20 years, self-directed real estate investor. So I understand that asset class. And about 5 years ago, I wanted to diversify my portfolio from real estate into agriculture. So I started looking at these benefits, and that hedge against inflation is big, and that constant appreciation with a cash yield is why a lot of these institutions look to agriculture. And it's a low correlation to stocks and bonds. So in some cases, it's a negative correlation. Now, it depends on which type of agriculture and which product we're talking about and how it's produced. And I'll talk a little bit about that later. But bottom line is, if the stock market crashes, it's not necessarily going to crash investments in farming and agriculture. And there's that low relationship to economic cycles. So sometimes agriculture is in a slump when the market is doing very well or the economy is doing very, very well, and vice versa. And there's, again, many segments of agriculture, and we'll focus on a few of those. But you can see, as overall, the returns are competitive. And this is just one little slice of agriculture, U.S. farmland. But over the long run, it tends to beat other asset classes, whether we're talking about stocks or bonds or real estate investment trusts, gold, and of course, inflation. So those are the three main reasons that we like agriculture, and the three reasons we want to educate people on why they might consider investing in this class.
Yeah, you bet. And I think certainly the last two items here on the slide are very timely and really represent, a lot of variables that investors are considering, no matter what sort of cycle of their financial life they're at. There seems to be some difficult decisions ahead on where you should be putting your dollars and what you should expect out of those returns. Not only from that pure return perspective, but also just, sort of the risk adjusted return of what you're taking on. And I think that's where the message is certainly very powerful. Take it, maybe a step further, just to educate a little bit of the group here. If you could, highlight some of those consumption trends, maybe what you're seeing in terms of development and where the dollars are going, and sort of what problems are trying to be addressed high level. I think that might be helpful for the group.
Yeah, so we kind of see this as a three-part problem, hence the diagram. The first is those consumer preferences. So there are not as many kids eating television dinners or frozen dinners as when I was a child. Their moms are feeding them, organic, vegan bento boxes, all kinds of very specialized diets. People are very attuned to their health, what they're putting in their body, not only what the food is, but how it was produced and even where it was produced. So locally grown is a big thing you'll see right now in many restaurants. And that's why farmers markets are popping up all over the place, because not only do people want to support their local farmers and their local economy, but they also want to know that their food is fresh, that their food has traveled fewer miles, consumed less energy getting to the point of consumption and the point of distribution. So those fragmented consumer preferences are translating into, they're really shaking up the agriculture production sphere, and they're requiring people or farmers and producers to vary the way they produce foods. For basically the past, from the mid 50s up until the early 2000s, agriculture rapidly industrialized, it conventionalized. There was a lot of economies of scales that were realized as farms became bigger and bigger, and the number of farmers in the United States has continued to draw down every single year, although we think that might be changing. And the average age of the farmer is getting older. So what we see now is, in response to these consumer demands, is that farmers are having to adapt. So controlled environment agriculture, also called indoor agriculture. And this is things like hydroponics, like that picture on the slide, aquaponics, vertical farms, urban farms. You'll see all these types of farms are popping up to produce those locally grown fruits and vegetables that are even in urban areas. So they're consumed essentially right where they're produced or very close to where they're produced. Thing is, with these types of farms, they're capital intensive. It takes a lot of startup costs. You're not just taking a bunch of land and maybe putting in some irrigation and plowing it. You're having to build a large greenhouse or a large warehouse or take a warehouse and put up LED lighting systems and hydroponic trays and water control systems and all those sorts of high-tech production methods. We're also seeing a lot on the livestock side, a lot of grass-fed cattle, grass-fed sheep, and other livestock animal products that will meet people's demand for a healthier cut of meat in some cases, and where people feel good about eating animals that were humanely raised. So those types of capital intensive production methods, they require a lot of money. At the same time, farmers that we talk to, and we probably have talked to, about a half a dozen farmers a week, they tell us that they're dissatisfied with their financing options. The banking system is essentially the same banks that their ag credit unions that their fathers and grandfathers used, and it's really optimized to grow conventional row crops. And there's USDA loans, and people always that don't really have a lot of the detail on it will say, well, what about, isn't ag subsidized? And there's all these farmer subsidies. Yes, in some cases, but those mainly apply to conventional row crop farmers and not more of the specialty farmers. And those are the ones we tend to work with. So it's a rapidly evolving field of agriculture, and we're excited to be a part of it.
Yeah, absolutely. And it sounds like there's a lot of disruptive trends occurring there, which, are maybe putting some pressure on the entrenched players, but providing an opportunity for new or expansion into new areas of interest for the existing firms. So maybe just to clarify a little bit, I think we've used the term agricultural investments a few different times, and you've touched on a few of the underlying classes, but maybe just to segment up here a little bit, how you look at the individual asset classes underlying sort of the whole theme, and maybe just a little detail about some features of each one. Chris?
Yeah, so our focus at Harvest Returns is on the production side of agriculture and the value-added processing in the supply chain. There are companies that focus on the inputs, seed companies, and agriculture technology and things like that, but we're really looking at production agriculture. And so we kind of break it up into these 6 sort of bins, and there's no really universal taxonomy of types of agriculture, but we consider timber as part of that. Timber obviously is a renewable resource. The wood goes in our houses, it goes in paper and cardboard boxes that Amazon loves to use to deliver its goods. It's a class that's popular with the institutional investor. So a lot of large pension funds will have thousands and thousands of acres of timbers, and very high net worth family will have lots of timber. So we like timber. Row crops is kind of what most people are familiar with. If you're driving down a country road, you see rows and rows of soybeans or corn or cotton. Those tend to be, from an investment standpoint, a lower type of yield, say 3 to 6%. Then there's livestock, and there's lots of different places you can enter the livestock chain. But we like livestock. We like grass-fed livestock because that type of product produces a higher premium and less volatility on the pricing side. And the returns you can get from a livestock operation vary, but we're doing some interesting things, and we'll talk about that when we talk about deal structure. Indoor agriculture, I mentioned, this is really hot right now. Everything from hydroponics to aquaponics. More and more of these are popping up in urban areas closer to where the consumers are, and that's exciting. Then there's sort of the specialty crops, which is kind of the opposite of the row crops, and this is your peppers, your vegetables, your fruits and berries and things like that may be growing on trees, just different than your large scale conventional sort of row crop, cereal crops. And then the processing facility. So that picture there is actually of a hemp CBD oil processing facility. So that's a hot thing these days, and we've actually just closed an investment on hemp and CBD oil. So we're excited to be entering that sector, and a lot of farmers are converting over their fields into hemp because it's a more productive and profitable crop for them these days.
Yeah, absolutely. Obviously a lot of growth and interest in that industry. And I think, again, what's exciting about sort of the overall theme is just, how much variety there is within these segments. And I think, a big proponent of sort of deal review and what we advocate for folks is really considering some of their own regional expertise and their regional familiarities, right? You know, if you're from an area of the country that's focused on livestock, and maybe you're able to tap into some education, just some context for you there, that might work really well for you when it comes time to make an investment choice versus somebody who maybe is more familiar with or you know, regionally available with indoor agriculture and some of those types of production facilities. So either way, it gives you a choice to really drill down and be specific and very, very strategic in the asset class that you ultimately invest in, which I think leads us to, you know, maybe some commentary on where those opportunities are. You know, you already mentioned a few different spaces that have, you know, really been top of mind for your team and what folks are looking for. Do you want to maybe touch on any other sort of you know, investment opportunities or specific trends you're seeing there, Chris?
Sure. So organics is a big deal. You'll go in your supermarket and you'll probably notice two things when it comes to organic produce. One is that they are more expensive for the most part than their conventional counterpart. And two, if you look at the labels on where they're produced, you'll see a lot of Mexico or Argentina or South America. And there's a couple of reasons for that. Most of those countries that I mentioned, they've always been doing organic. They didn't go through the big industrial phase that we did in the U.S. in the late 20th century, where chemicals and pesticides and herbicides were sort of a normal part of growing. And because of that, the U.S. is sort of trying to catch up, and it takes several years for a piece of dirt that's been grown conventionally to be certified by the U.S. Department of Agriculture as organic. And that means there's an opportunity for farmers who are doing that. It takes some time, but it also produces some returns, and it also supports that sort of locally grown movement. So precision agriculture, that's where you take agriculture and apply technology. And that's everything from drones and satellites that are used to give a farmer a better idea what's going on in his or her fields, down to the square foot or inch even, with multispectral imagery and real-time soil and moisture monitors inside the fields that are all connected to the Internet of Things and GPS steered tractors. All these things are really changing the face of agriculture, but like I said, they're capital intensive, so they require different sources of financing. And then there's indoor agriculture, which I mentioned, and you can see that there's a lot of venture capital funding that's pouring into indoor agriculture, probably more than any other sector right now. And that is because people see it as a way to decentralize the food system. For example, most of the sort of leafy greens in the United States are grown in Salinas Valley, California. Well, where are most of the consumers in the US? They are all over the place, but they're not in Salinas Valley, California. And so those farms now, indoor farms, are springing up all over the country to supply fresh leafy greens to local populations, East Coast, northern latitudes where they wouldn't normally grow year round. All that's happening because of indoor agriculture. So that's some of the areas that we like to think about, and we like to put together opportunities to provide our investors access to these sorts of high growth areas.
Yeah, it's really interesting. And I think another situation where a lot of the technological advancements and some of the progress that's being made there is probably not very well known by most folks across the country. You know, I myself live in New York State and am regionally close to a lot of farmers in production here, but it's not something people classically think of when they consider New York. But there's this huge industry that, you know, that comes from Cornell and the agricultural programs around here that's driving a ton of technology improvements and efficiency gains. But you know, hasn't quite had the limelight shown on it that, you know, for instance, we hear about AI or some of the other technologies that get front, you know, headline news when it comes to business aspects. So a lot of good opportunities there. And I think, you know, we'll take that maybe just as a step two to sort of, you know, maybe clarify a couple of different strategies you could use to implement. And again, where this sort of fits in with a tax advantage and self-directed aspect. So, you know, for us at Rocket Dollar, and I know you said you've had experience with it personally in both, you know, on the platform side, Chris, with Harvest Returns, but, you know, we see a lot of demand and interest from folks who are saving for retirement. And that can come in a lot of different forms. And maybe there are different sort of times across the life cycle as an investor and a saver for retirement where you consider different strategies. I think in particular, you know, something that's really caught people's attention this past, you know, 6 months, and now with yields becoming compressed across the globe, it's really difficult if you are in that savings and fixed income stage of your life where you're beginning to tap retirement, for your actual day-to-day life, you're starved for yield. And so going to a place with some of those really strong fundamental characteristics that you touched upon, whether it's the row crops or the livestock aspects, those have really strong yield opportunities that can provide that uncorrelated income in times of market volatility. So I know that's been really important. Any other sort of mechanics or deal structures that you think might work well for a retirement account, Chris?
Yeah, so that's interesting. You mentioned yield and fixed income. We have done both debt and equity investments on harvest returns, and like any investment, there's various risk and return profiles and risk adjusted returns, as you mentioned. And so, for example, on our debt, we did a collateralized grass-fed cattle note, and we've got some more products like that on the way for investors who are just looking for a steady quarterly payout, single digit, high single digit type of returns. That, of course, that's going to beat the socks off of certificate deposits and T-bills and things like that. Obviously, there's some risk there, but the way we put these together is that we collateralize the products, which is cattle, and at some point that collateral, because of the natural growth in cattle, when it's out there chomping on grass, it is going to be higher than the value of the investment, in the value of the bond, and producing that nice steady yield anywhere from, say, 6 months to 3-year notes. And so we're pretty excited about doing something like that. As far as we know, nobody else is really doing any sort of product like that. And then we have equity investments as well, where there may be a little bit higher risk, but you're taking a piece of the profit of the company, and they're defined duration exits. So we structure these in similar ways to commercial real estate, because that's kind of my background. So a lot of farmland REITs, or even farmland investments, you basically buy the land and sit on it and rent it out to a cash crop farmer for decades, even wait for that land to appreciate or wait for it to be in a path of development, which is great. It's a good way to make money, but it's also puts your money, makes it illiquid for decades versus, say, 3 to 5 years, which is what we're kind of shooting for with our investment. So it's, with a little creativity, you can earn money in different ways with farming, and that's what we shoot to do.
Yeah, absolutely, and it works perfect for the Rocket Dollar offering. I mean, our goal is really to empower our clients to unlock their retirement dollars and to build a truly diversified portfolio that still includes some market traded securities at the end of the day, but offers you an actual diversified opportunity like the ones you've discussed here that really are uncorrelated with other positions you might hold. A lot of different investment structures work. Something to be cognizant of when you're considering retirement account investing is there are quite a few guidelines about who you can transact with. And so in transacting with and investing with somebody in your own family or assets that you may already own personally, those are going to be prohibited by the IRS. And so it's important to keep an arm's length away from any investment that your account makes, which further enforces just how helpful a platform like Harvest Returns can be, because they're helping you create that and find that deal flow that's not part of your family's personal assets and business affiliations, because you really want to keep away from that. And at the end of the day, just keep in mind, as you're assessing options and you're beginning to look at paperwork and sort of understand deal terms, at the end of the day, your own characteristics as the retirement account holder are going to pass through for the fundraise or the platform that you're engaging with. And so if they've got income requirements for crowdfunding guidelines or accreditation standards that need to be completed and met in order to invest in the fund, that's all going to pass through to you as an individual. So the Rocket Dollar offering is really about empowering you to use those retirement dollars to allocate to specific investments like the ones we've touched on today. And on the back end, you really think about it just as an extension of the rest of your personal wealth, and it allows you to truly be long-term strategically specific with what you want to achieve. So thank you for all that, Chris. Got just a little bit of a flow chart here of how things flow through the Rocket Dollar process. We fulfill the IRA or individual 401ks accounts with the legal entity that holds the assets, which ultimately allows that client to really direct and maintain those investments on their own without being encumbered by a custodian or trust company sort of stepping in the middle. So it works great with a platform like Harvest Returns. You can get set up as a Rocket Dollar user very quickly and just begin trading, if you will. So all that being said, we've got some details here at the end. Really appreciate everybody's time. Thank you so much, Chris, for joining us. We're going to get through a couple of question and answers here. It looks like we had a few pop up, but just wanted to highlight some contact information here for both teams. Chris and his group can be found at harvestreturns.com, rocketdollar.com on our side of it here. We've got a group email box that you're welcome to send inquiries into. And if you're an interested user who'd like to get started, we've got a coupon here specifically for Harvest Return clients that takes $100 off our opening fee of $360. So let me get to the questions here, and appreciate everybody's attention. So we've got a question here concerning some retirement account functionality and the introduction of a very specific topic called UBTI, Unrelated Business Taxable Income. And so the folks from the crowd here asked a great question concerning how you can identify UBIT and how some of those deal structures might trigger UBIT or leverage, which could generate some additional tax considerations in the account. So I'll try to take this on a little bit, and they highlight rightfully that some investments, such as an opportunity zone or certain structures, might generate a bit of unrelated debt financed income, which the IRS does require you to file annually for and to potentially pay some taxes. And so what the person here is referring to is that if your IRA invests in a fund that uses debt and uses leverage, it can sometimes create this tax called unrelated business taxable income, which results in the IRA having to pay UBIT. So what that means is, as opposed to normally when an IRA is completely tax deferred and all a pass-through shelter, there's no annual requirements to pay taxes or to report those necessarily. In this case, if you invest in a fund that generates UBIT, you may have a tax filing that is required annually, and that could require some payment of taxes. It's not often a huge consideration, and it requires typically at least $1,000 of UBIT to be generated each year in order for you to have to file. So a lot of times those investment structures don't actually hit those thresholds, but it's certainly a great question. I'd be happy to follow up with the interested lead who sent that one in. Chris, I don't know if you have any comments there on deal structures or UBIT, if that's something that sort of hits your radar and you guys think about when you're sourcing deals.
Yeah, we definitely think about it. I'm not qualified to give advice on it, although we have a very smart accountant who is almost done with our CPA who we talk to about. I will say that most of our investments have some hybrid of debt or equity, although some are purely equity and some are purely debt. So I guess the bottom line is, if you are concerned about UBIT, talk to your tax professional and have them review the specific parameters of the deal to make sure you don't get caught by surprise.
Yeah, great advice. And there are a couple things that we can help you with too on the retirement account side. There's a few different structures that can help alleviate some of those pressures. So, it sort of comes down to a personal situation, but a great question and certainly something to think about. We've got a couple more here. Another one that I think is sort of a news headline that's hit everybody's radar obviously recently, and I'll kick it to Chris, is really just concerning some of the trade policy that we've seen and some of the back and forth and the volatility that's being expressed between the U.S. and China and some of the other markets around the world. How do you see some of those political concerns impacting your industry and sort of the way you guys look at deals?
Yeah, that's a great question, Mark. I think it's a little bit, most of the headlines that you'll see, you've seen a few these past days because there's some new tariffs going online September 1st regarding agriculture that China is imposing in retaliation to our own tariffs. But I do say, I think it's oversimplifying to say that the trade war, these tariffs are hurting U.S. agriculture as a whole. It really depends on what type of agriculture we're talking about and where it is. For example, dairy farmers, you see a lot of stories on the dairy farmers in the U.S. Well, frankly, dairy farmers were hurting way prior to the trade war for various reasons. Mostly people just aren't drinking as much milk as they used to. Other sort of commodity row crops were in a slump. a few years before the trade war. That said, there are specific products, like I read something about apples and cherries grown in the Pacific Northwest having like an over 60% tariff being imposed on them by China. Obviously, that's going to make an impact in those specific commodities and products. So I guess from an investment standpoint, you need to be aware of what you're investing in, understand the market conditions, and ask questions before you invest to that particular asset manager or investment sponsor, so that you don't run those risks of getting sucked into the trade war with your investments. And sooner or later it'll end. One side or another will back down, and I think it's like any other sort of economic condition. It's transient.
Yeah, sure. That's certainly something that, is of interest for folks for a myriad of different reasons. It's just another good thing to consider here. Well, I think we touched on a little bit, about how the retirement account structure works. But I'll just elaborate there again. That provides the Rocket Dollar functionality allows you to be very specific in where you allocate, and pairing it with somebody who's offering these types of investment opportunities like Chris has mentioned. It just lets you really drill down into the specific asset class and the actual product that you want to be, you want to be where you want to be parking your dollar. So as you just mentioned, those specific, asymmetric risks that are unique to each, product, you can sort of mitigate against those based on what you understand and what's specific to your region. I think at the end of the day, we've covered a lot of good stuff here. Chris, looks like we got one last question concerning maybe a little bit more on the tech side. You touched on some of the advancements that are happening, a lot of the VC money hitting the market. But the question from the crowd was just concerning, what sort of technology do you see being the brightest and sort of the hottest, thing to watch here over the next year or two?
Yeah, there's really two areas. One is that precision agriculture and all the things that encompasses, whether it's robotic harvesters and pickers. A lot of those same farms I talked about in Salinas Valley are facing labor shortages for various reasons, and companies, very smart entrepreneurial companies, are coming into place, developing things like robotic strawberry pickers to alleviate those labor shortages. And also biotechnology. There's a lot of controversy over GMOs, but really it's the future of agriculture. If we're going to be able to feed 10 billion people on the planet by 2050, we're going to need every edge we can get on production, and biotechnology to help crops grow in drought conditions and be pest resistant and things like that without using chemicals are really important. So GMOs, and there's something called CRISPR technology. Biotechnology is really important, and we're going to see more and more of it in the food system.
Yeah, terrific. Certainly exciting application of all the great technologies evolving. Well, thank you so much, Chris. We've gotten through the end of our questions there from the crowd. Thank you everybody who gave us their time today. We really do appreciate your attention and the thoughtful questions. Again, thank you so much to Chris Rowley and the Harvest Returns team. Mark Peck from Rocket Dollar here, signing off, and we appreciate your time, and hopefully we could add some value to your day, and happy to discuss anything more specifically offline with any of the folks in the crowd, or feel free to visit either or both of our websites to learn more. Thanks so much, and have a great day, everybody.